Whenever you have two different types of real estate, such as retail and residential, contributing to net operating income, you should consider separating out the back end model logic. My name is Edward Sapp, founder of Sapp Capital Advisors, and I build intricate real estate models for billion-dollar investment funds. We have just built a template in response to a DC client that invests in multifamily buildings with large commercial components. Think of any infill podium style apartment complex with Trader Joe's, Starbucks, Orange Theory on the ground floor, and then 4 or 5 floors of residential on top of this, common in many downtown infill Main Street areas across the United States. The residential and commercial components of mixed-use buildings often have very different economic demand drivers. You will likely need to forecast different projections for the residential and commercial components. For instance, your residential leasing may be thriving, but there could be an economic slowdown or an oversupply of retail that would require a different set of projections for your retail commercial component. To drive the point home, think of vacancy rates. Vacancy rates are important drivers in any model. You may wish to include separate vacancy rates for your residential and commercial model logic components. For instance, you may already assume that residential vacancy rates are 95% for your area because everybody wants to live there. But maybe you're competing with a ton of new retail space that just got built next door, so your leasing assumptions and hence your vacancy for just the retail component are going to be a little bit dampened and will take a lot longer to get to a 95 or 93% stabilized occupancy percent. But maybe commercial demand in your region is low, so you need to project a slower lease-up curve from 0 to 90% occupancy over a longer time horizon than your residential would take given the strong demand. The point is, your residential and commercial components will have different narratives that you need to project in your financial model. To appropriately capture these narratives, I highly recommend modeling the commercial and residential components of a mixed-use building separately so that you can accurately reflect the different stories that your residential and commercial components will take, especially when your commercial component is a significant contributing factor to net operating income. This has been Edward Sapp from Sapp Capital Advisors, signing off. Check us out for free materials surrounding modeling best practices, as well as our premium template library to help you quickly underwrite deals with the same exact logic that billion-dollar funds use with us on a daily basis. Check us out at www.sap.capital. And if you like this content, please like and subscribe. Please comment. Let us know what you think. We're happy to make any kind of instructional content you're looking for. Your ideas are gold to us. Thanks again, and see you in the next one.